Many retail traders still picture financial fraud as badly spelled emails, mysterious offshore princes, or obnoxious get-rich-quick browser ads. Because of that outdated mindset, finding a formal, regulated badge at the bottom of a web page feels like an ironclad guarantee of safety. Today, relying on that tiny graphic actually makes your capital an easy target. Welcome to the reality of 2026. The modern trap is a multi-million-dollar digital ecosystem. Fraud rings now engineer platforms that look, feel, and operate exactly like Tier 1 institutional brokers. These modern systems are engineered to strip a trader of their entire net worth before they ever place a legitimate market order. Traders who still rely on a website footer or a regulation badge are operating with a target on their backs. The contact often begins with a voice you already trust. This chart shows how the trap functions. You deposit $5,000 and immediately see massive daily wins, but the price feeds are entirely manipulated by the host. These programmed victories fatten your account balance to encourage a six-figure deposit. These early, effortless wins function as the primary psychological bait of a rigged system. This diagram illustrates a tactic called regulatory arbitrage. You click Open Account next to a legitimate UK or Australian regulatory logo, but the legal paperwork actually routes your capital directly into an unregulated offshore shell company. Often, the site itself is a flawless forgery. Scammers register domains that differ from a trusted broker by a single letter, copying every single page, replicating every chart, and the live chat widget. You type in your credentials to check your balance. The screen briefly glitches, and you've just handed your password and two-factor authentication codes straight to the operators, draining your real account. Let's say you manage to avoid the clones and build a large balance on a seemingly normal platform. The final trap springs the moment you try to take your profits out. Support blocks your request. Releasing your funds requires a 15% international transfer tax or an IRS clearance fee, paid up front in Bitcoin. Or the drain happens right on the charts. A popular Telegram guru suddenly demands you to buy low-liquidity exotic pairs. As you and thousands of followers spike the price, the guru sells their massive position into your orders, using their own audience as exit liquidity. Any platform that requires you to pay fresh capital to access your existing profits is providing mathematical proof of fraud. To survive, you must drop the retail mindset and adopt the rigor of an institutional auditor. Glancing at an About Us page is no longer a viable defense. This map shows the global LEI index. Legitimate institutions hold a 20-character legal entity identifier, verifying their true corporate structure. Pair that with a domain lookup. If a broker claims a decade of service, but their registry is 3 weeks old, it's a lie. Next, check their physical footprint. Search their address to ensure it's an actual headquarters, not a shared virtual office shell. Skipping these advanced auditing steps means you are choosing to trade blindfolded in an environment built specifically to separate you from your money. The visual difference between a legitimate broker and a weaponized scam operation is now invisible to the naked eye. In 2026, capital preservation must always supersede the pursuit of profit. That is why FXNX provides fully transparent, fully verifiable institutional-grade trading infrastructure, setting the industry standard for client security. Take control of your exposure. Use the FXNX Broker Audit Tool to cross-reference your current platform against the 2026 Global Scam Database. Run the audit today. Waiting until a withdrawal is blocked means the battle for your capital is already over.